I think of the last 10 or 12 ad tech companies that have gone public in the US, I think we've only got one of them with a enterprise value over $100 million, and every single one of them, traded at some point for $500 million, $1 billion, or multiple billions.
Let's name names. This is it'd be more fun if we can talk about who we're talking about. Trade Desk are obviously they're the rising star.
Yeah, that's the darling of the moment. I think Trade Desk has actually, in some ways, been as a next generation version, has been a little bit more explicit. Where I think the Tremors and the Yumis or Rocky Fuels or some of the ones we saw before were a little more vague about, hey, we just add value. They've said, no, we have real close relationships with agencies. This is what we do. We're going to see a certain amount of margin compression. They're obviously on a tear right now. I think the market cap's got to be $7 billion, 6.5 or 7 billion.
6.5, I think, yeah.
I think the big issues are, the street is trading them up for a couple reasons. One, CTV, connected TV, that's the latest acronym. I don't know, it's PTV, programmatic, and LTV, whatever, and international growth. And they've held their margins pretty well. My bet is, because they're so software-based, the one thing I look at when I look at these companies, I look at sort of engineering team size relative to the total employee headcount. Most of the companies that said they were tech were just offshoring to Ukraine. I mean, it's offshoring for us. It's not quite offshore here.
Yep.
Well, I guess it is offshore here, but not offshore for Europeans. So to the extent they can keep solving it with software, they'll hold it up longer. To the extent they can drive more international growth, they'll hold it up. The CTV, connected TV, is really tiny. They probably can't keep tracking that. If they can hold on to that and probably find a path into linear TV, then I think they can make it to the other side. But we haven't always seen companies that look like them make it to the other side.
Again, yesterday with my chat with Dags, he sort of mentioned, I asked him if he could eliminate and murder the employees of any one company, who would you choose? And he chose Amazon. Would you, he used to be in the army, so it was a reference to his army background. Yeah, I like Amazon people. Yeah.
I think Amazon...
Amazon, should we murder them all, is what I'm trying to ask.
Well, I'll tell you, I think Amazon is extraordinary. I think that I've watched that company and I've watched them for well over 20 years. I've had friends, I actually had a friend who just retired after 21 years there. I think that the way they're executing is really extraordinary. I think that the fact that look at video advertising, the fact that they can come into video and video advertising differently than anybody else. I mean, in the panel right before, it was talked about how some companies like a Facebook or even an Apple throws token money to independent producers to get product. That's not what's going on at Amazon. They want to build the first ground-up studio that's been built in the last 90 years. And they're taking that strategy. And if you look at what's being done in Prime and Originals, and then if you look at Twitch, which was bought into the group that owned personal storage, and they just saw an opportunity, that was not part of this sort of like cohesive strategy to attack video. It was, hey, this fits our business well. They buy it. Then they realize Twitch could be a bigger ad-supported thing, and they give that group the power. Then you have the hardware people that do the Fire TV that realize, hey, why shouldn't we be able to build our own independent streaming services with TV companies? They don't have to go ask permission to Prime to go do that. They can go do that on their own. And then you have people in the AWS group are saying, why shouldn't we have a video ad server on top of it to serve some of these things? Because that's a high margin bits business that we should do. All four of those things are going to fundamentally could converge, but they're ultimately going to have the same impact, which is they're going to roll in this business. And the most important thing compared to the rest of FANG, and I know we're out of time, is that money that when a dollar goes into the Amazon business, you don't have 83 cents going into Mark Zuckerberg's pocket and the pocket of his investors or Google that are coming out all in net profit. Outside of AWS, everything's losing money. All of that money is going back to the consumer. Now Walmart did this model, and you can argue at some point it has to change. But for now, all of the money going into Amazon is subsidizing other things that are fundamentally more products at lower prices, faster than people have ever had before. More video content, faster, cheaper.
Okay.
But I'm scared of that. I mean, I'm in awe of them, but I'm scared of them.
I think everybody is. Okay, you have a habit of sort of starting companies that sell for hundreds of millions. What is there any? You know, we've seen fewer and fewer ad tech startups springing up. Are there any interesting opportunities left, do you think? And if you had to choose something aside from your own business, of course, what would it be and why?
Well, yeah, I think there's a lot of opportunities left. I think the problem with ad tech is when it gets frothy, everybody wants to start ad tech, and then when it's not frothy, they all want to get out of it, and they didn't know what they were trying to do. I think that there are a lot of issues to be solved in integrating truly cross-platform and what that means. I've not seen people come at the market from a consumer standpoint. I continue to see people come at the market from a trade standpoint and solving a problem for an agency or a problem for a publisher or a network or a seller. They're not solving it from a consumer standpoint. I think we're going to see real innovation there. I think the whole direct-to-consumer movement, or D2C, as it's being called sometimes, the fact that the large brands that were big packagers and use distribution are going upside down, I think those companies are going to have very different advertising and marketing approaches. These are the Dollar Shave Clubs, as we saw earlier. You know, the new ones now are Quip toothbrushes and Casper mattresses, and these are just the US versions, and Mack Weldon underwear and Away luggage. I think those businesses are going to, I think Procter & Gamble is not going to be relevant to anybody in 5 years. It's not going to be relevant. And I think that is going to bring a whole new need in ad tech, marketing tech that we haven't seen. In the pure marketing tech, you see business like Shopify that's just off the charts growing. We're going to see a lot of that in the next generation of marketing tech.